Good evening, everyone. Once again, welcome to the World Investor Education Week, and feels so great to see all the names I've seen from day one, then day two, and then again day three. I see very familiar names as usual. A few more added members to this particular community, but that's great. I have started getting questions from yesterday's session. So meanwhile, just a few more people join. I'll just address those. Um just to see, first question: where do we park the money when we are not decided? So a lot of people have asked this question that when if we are not decided what to do with the money. So the very obvious option, you would keep it in your bank account, but then sure, you lose the value of money because there is no interest as such. But when you are really not sure where to park the money, it is not a good idea to trade or speculate with it in gold or currencies or commodities. Okay, you definitely, if you're not sure, the first idea is to either invest into government securities or government bonds, which can give you a fixed income as in a form of coupon, or if you are inclined towards stocks or shares, look for those companies which do not move much and which gives you a fixed dividend every quarter, which means companies like Vodafone, companies like Verizon, companies like Coca-Cola, ExxonMobil, Total, ENI, SPA, British Petroleum, Royal Dutch Shell, all these companies give very good dividends and they do not move as such. There is very low volatility. So your portfolio remains protected against the prices movement. Because if you invest in Apples and the Facebooks during the time when you're not sure where to park your money, if you're not on the right side of the trade, then your portfolio might move a lot. It will be very fluctuating. Plus, you do not get any dividends on it. So better to. Yesterday, I shared a chart with you all, uh, which said that when you are at a stage where you feel that the conditions are very recessionary or the growth has diminished from the economy, park your money into defensive stocks. Because during this time, what are the defensive stocks? The defensive stocks are the companies which are non-cyclical in nature, which means whether recession or no recession, their business will not get affected that much. Imagine recession or no recession, people are still going to drink Coca-Cola, right? They're still going to buy a toothpaste or toothbrush. So invest into those kind of companies which are non-cyclical in nature. And what these companies do, they sometimes during the period of recession, to make themselves more attractive, they increase their dividends as well. So it will be a good idea if you're not sure where to park your money, invest into defensive stocks. That is a much ideal asset class to invest into. Any tips would help trading on daily basis on the local market. See, local market, I may not be the right person to guide you towards the local market because I do not track it. But I will give you one suggestion, that do not concentrate on the markets which are smaller. So I'm not saying the local markets are not effective, but uh, during the times of volatility, your exposure should be much more diverse. Like, for example, this is always a question. I have a lot of investors who would like to invest into domestic markets, who would like to invest into their own home countries, which you should. But you have to understand one thing, that when it comes to buy something, tell me, if you have to order something online, which is the company do you use? What's the company you use if you have to order something online? Grocery, food items, phone, laptops, headphones, shoes, clothes. Just name a few. Use your chat options, guys. Okay, I'll start getting answers, different answers. But yes, I mean, everybody is connecting on one specific company. So when you have to use an e-commerce website, If you have to buy something online, say food or clothes or shoes, what's the one-stop shop you get? Try answering, guys. Try answering. It will really help you keep being engaged in the session, and it really makes it much more interactive. So most of you said, some of you said noon.com, some of you said Amazon, some of you said Shein, different websites. Collectively, first of all, I want to make sure everybody can hear me. Can everybody hear me? Look at my presentation, can see everything? Give me a yes or okay. Right? People wear shoes like Skechers, Adidas, Nike. You buy phones from Apple or Samsung. So there's not much domestic companies you're actually using. If you're eating at McDonald's and KFC, those are global companies. If you're driving a Volkswagen, Ford, these are international companies, right? So while you're using their products, it's just not you. It's there are a lot of people who are using these products. So that's why global markets, especially US, Europe, these are the markets where a lot of people they do their investments as well, right? So always better to invest into companies which are globally accepted and used, much bigger companies. So that will be a bit safer as compared to being concentrated on one market. Local markets are not bad, but the idea is the maturity of them, there is still some time before it becomes mature. Um, Okay, something difference between margin and leverage. So we'll go to the platform and we'll try to understand once again. Minimum amount to invest, we'll talk about it. It's not something which we can decide right away. Okay, how can I dictate the leverage? We'll definitely understand this. Okay, great. So everybody can hear me right now? Sorry, guys, I'm just doing this test again and again because there are a lot of people who are right now a bit confused. They can hear me, they cannot. Right, so I will take it from here. I'm assuming that everybody can hear me. Please, if the network is breaking down, don't worry about it. We have already uploaded day one of this webinar on our YouTube. You can also find day two later on once this session is over, and then tomorrow what we are discussing today. So this there will be recording on YouTube to help you out with this. Now, my name is Yogesh. Welcome to everyone. I see a lot of familiar names who I've been seeing from day one, and I see a lot of new names as well. I hope the people who did not have demo accounts, sorry, I still have one person who has a problem. Just 1 second, please. Okay. So anybody who is not able to hear me or there's a problem, please try reconnecting. It might help. So good. Yesterday, those who were not able to get the demo accounts, I'm sure at least today you must have received a demo account. And we will try, definitely we'll log into the demo account also, and we'll do some trades. But before that, what's the today's topic? Today's topic is about fundamental analysis. So I promised you that we are going to contribute. I'm trying to contribute something new every day, which can change your perspective towards investments, trading. Question, are we going to discuss how to interpret charts, oscillators, and technical tools? So that is going to be tomorrow. So definitely we are going to do technical analysis tomorrow. That's day 4. Today we are all going to discuss about fundamental analysis and news. Now, before we start, let's understand what I have said since day one. This is not one of those webinars which by any way promises you to make you rich or compels you to open a trading account. Please, it's my humble request, do not take any of my information as recommendations or suggestions. What we are doing right now is for illustration purposes, but obviously the most important thing is to understand the base and the concept of these investments and trades and these concepts. So throughout this session, what we'll try to achieve is the very basic rule of investments and trading, and definitely the trade which should be placed in your live account, it should be done with the help of a financial consultant, help of your experts, plus keeping in mind your personal risk appetite, because trading and investments, it has a lot of market risk, and that's why you need to be very careful when you're investing. You should be aware and informed. Do not borrow money from anyone. Do not take a loan for investments or trading. Don't think that you can make an additional guaranteed percentage or source of income from this. This is this can be very risky. We understood yesterday how risky leverage can be. We are going to log in again and have another look in leverage and margin trading. But let's start something called economic events or fundamental analysis. Now, friends, what is fundamental analysis? Again, let's have the same practice. Guys, I have my notepad with me. I will start writing whatever I'm discussing. I hope everybody has a notepad right now. If you have any questions, you can write on your notepad, ask me later, or if you have some important point you think I have contributed to it, please write there and we'll learn together. Now, when we talk about fundamental analysis, directly switch on to the most important economic events. Fundamental analysis simply means looking at the market news and information. And I'm talking about anything happens around the world: pandemic, trade war, Brexit, US elections, anything, any political instability, economic instability, any news about a company, everything included is called fundamental analysis. I'll give you one example. Let's say if I have to pick, if I have to understand, should I buy McDonald's or not as a stock? There are two ways to do it. One, I will see the historical price performance of McDonald's, and I will try to understand that, okay, what has been a very good price for McDonald's to enter? So if McDonald's stock is say $250 per share, and let me give you an example right on the platform, so it will be easier. Those who have the platform links, demo accounts, you can log in with me. It is something which we can do together, and we can go through what we did, a few trades also. So you go to your link, your password, type your demo ID, and just log in here. So it will be easy for you. Meanwhile, I'll just see the trades which I took. Okay, that's good. Okay, let me hide this window. Does anyone remembers what was the price? What was the price I bought gold yesterday? Take a wild guess. Do you remember anyone? What was the price at which I bought gold? If you were trading with me, you would have purchased it, so you would see the cost price. Anyone remembers what price I bought gold yesterday? That's why Notepad is really important, guys. Keep writing, because if you would know what price I bought it yesterday, then you would see what's the price today, and you compare how the price moves. Okay, I got one answer. It's okay. Okay, not 123. That was Airbnb. 1827, around 1840, $1,800. Brilliant, guys. I see a lot of you remember. At least a lot of you remember 1820, 1830 to 40. Okay, now let me show you what price I bought gold yesterday. I did not close any trades because since we were discussing yesterday about leverage, so I just kept it open. Probably I forgot also. So currently, that's different. So today gold price is 1851. I bought it at 1828. So if you see, since I bought 550 ounces at 1828, and right now it is 1851. So I have a $12,000 profit, but needless to say, it's $1 million position and I was heavily leveraged in this account. But that was my point to explain it to you, that what leads to higher leverage, why people are so inclined towards taking higher leverage for this reason. Because if it works out in your favor, then you make a lot of money. $12,000 on a $30,000 account, which means almost 50%, very close to 40% profit in just one day on your investment. But that could have been a loss as well. So that's why you have to be very careful. Yesterday, I did not put a stop loss or take profit. I just kept it open because this was my demo account, right? In a live account, I would never take such a big trade. It would be highly leveraged. I would be very scared of taking such a big trade because I don't have that high risk appetite. But understand the concept of leverage. By blocking just $5,000 yesterday, you took $1 million position of gold, right? Now you have a profit of $12,000, which means in a $30,000 account, you have a profit of $12,000. That's very close to 45% of your return. You got 40% return in a day. So the profit is leveraged, it is increased. Normally, what would you get, right? So again, as I said, this is a very high aggressive trade, but let me show you on the chart what happened since yesterday till now. So that's one thing about global markets. It moves a lot, especially trading and speculation. So let me show you last 3 days of how gold has gone up. Even make it one day, let's say. So you'll be able to see. If you see this blue triangle, I hope everybody can see this blue triangle. This is the one where I took the trade yesterday around 8 o'clock in the evening Dubai time. And now from here, price has moved to this 1851, 1854. It has gone to highest 1854. So from 1828 to 1854, what happened? A lot of things happened. So today, that's why we are here to discuss about the fundamental analysis and what role it plays in our lives. So fundamental analysis comprises of the news and the events. I was talking to you about McDonald's stock. So let's see McDonald's. I was short sell on McDonald's. It has not gone down so much. Now look at this. Let's take. So right now what I'm doing is not fundamental. I'm just checking. This is a price movement in McDonald's. So if you see clearly, there's a one point, and this is a historical analysis of the prices. I'm looking at last 6 month prices, and I find one similarity, that sometimes prices of McDonald's reach to this point and bounces back. If you see what I mean here, let me show you very quickly. It has happened here. It has happened here. It has happened here. It has happened again at this price 3 to 4 times. And then when it breaks, it goes down. But most of the time I have seen, and if you see on the left side of this, look at this price right here. Right? So if McDonald's comes again here, I would be very much inclined towards buying this stock, because I see that most of the time this price comes down, it bounces back from this level, right? Anybody who disagrees with me, please do raise a query, do raise a question, and I'll tell you that why it is what it is, right? So if you see, those are the levels from where it touches and bounces back. So I've drawn a line over there, and you see that when it breaks that line, it starts a different trend altogether, which happened just, if you see the last buy, just before that, there's a small consolidation right here. See, right here. This is their own sweet support line, which they have created right here. See. This small line, again there's a concern, so it breaks one support line, it reaches to another. So if I am doing a fundamental analysis, I will not see all this right now. If I have to buy McDonald's on a technical perspective, analyzing the historical charts, I can see that this is a good buying price I should enter at this buying price. But fundamental analysis is completely different. So one way, if I were to do a technical analysis on McDonald's and expect a buy or sell, I would buy right now given on the basis of the historical price chart. But if I'm doing a fundamental analysis, what I'll do, I will go to McDonald's. I'll sit there and see how many people come to McDonald's. Then I'll go to Burger King. Then I see how many people go to Burger King. Then I'll taste their burgers also. I'll see which burgers is the cheapest, which is the most affordable, and which are the what is Hardee's doing, what is Texas Burger doing, right? And then I'll evaluate balance sheet of McDonald's. I see how much earnings they have made in last 1 year, how much profits they have generated. On the basis of that, I would issue a call that let's buy McDonald's. That is fundamental analysis. That is news based analysis or fundamental analysis, right? So okay, one question, what about July and August? The drop was more. So yeah, we saw July and so basically July there was a drop, but since August the stock price has been going higher. Look at this. Look at this particular trend line which has been going high from July till August till September has been continue to going high, and then again it went down and then again it reached to that point. So here, so again it's a technical analysis, but what we are discussing today is fundamentals. Now this what I drew lines over here, this was technical, which we'll discuss tomorrow, but fundamentals is more about news based. If I have to buy a stock, yesterday somebody asked me a question that if I have to pick a stock to buy or if I don't want to buy, how will I decide it? So you can decide on the basis of fundamentals as well. More important, because if today you have to decide, let's say I tell you invest in my business. Why would you invest in my business? What is the reason you would invest into my business? You will see what is my sector, you will see who's my competition, you will see how much profits I have generated in last 1 or 2 years, you will see how much earnings I have made, you will see what is the size of my team, how effective is my management, everything, right? All of this is fundamental analysis, correct? Now we will talk about a much more enhanced on a macro level. So I'm talking about stocks right now. So I'm talking about balance sheets and valuations. We'll go into stocks as well. What about commodities and currencies? So today, if you want to trade and speculate, which are the news what you should be looking at and how in this platform you can look at those news. So let me first take you to the news which are important. So these are the top 5 economic news and events which occur uh, at different times. Sometimes few of these news are more frequent than another, but all of these are really important indicators and market moves when this kind of news comes out or if there's a big difference. Please have your notepads ready. This is one of the most important things you are going to get to know today. As a trader or a speculator, fundamental news. So please note down, if you're trading in oil, gold, US dollar, euro, any currency which is related, which is paired against dollar, or a stock market index like Dow Jones, S&P, Nasdaq, any other stock market index. These are few news which are going to be very important if you are a day trader. Okay, so understand what does this mean. First is FOMC meeting. Now I have given the name FOMC because so can anybody tell me what's the name of the central bank of US? What's the name of the central bank of US? Please use your chat options. More you write, even if you don't know, search from Google and write it. More you write about it, you will become very much familiar with the word. Okay. Everyone try this. Federal Reserve Bank. That's correct. Every country has a central bank. In US, the central bank is called Federal Reserve. In Europe, it is called European Central Bank. In China, the central bank is called People's Republic Bank of China. In India, it is called Reserve Bank of India or RBI. In Japan, it is called Bank of Japan. In Australia, it is called Australian Central Bank, like that. And one thing which you need to know about central bank, uh, like if a country is a human body, then the very heart of that body would be central bank. And what the heart does, it gives life, blood throughout the body. It pumps blood throughout the body, right? Central bank can pump money into the economy and it can keep the economy healthy and growing. Sometimes the economy needs less money, sometimes they need more money, but they would, all these functions, it would be carried out by central bank, right? Now, what you have to understand is FOMC meeting, or what is the full form of FOMC? FOMC stands for Federal Open Market Committee. Okay. And Federal Open Market Committee, it is a branch of central bank, it is a branch of Federal Reserve Bank, which is concerned specifically with open market operations, OMO. And what is open market operations? For your simplicity, to understand this, OMO or open market operations means printing of new currency. So printing of new currency is a type of OMO or a open market operation, right? So to authorize on that and to take decisions regarding printing more currency or inject more cash into the economy, Federal Reserve made a separate committee called Federal Open Market Committee, which is called FOMC. Now, this FOMC meeting happens 8 times in 1 year. Okay. Now, what the FOMC decides about? FOMC decides about how much cash should we keep in the economy or should we remove from the economy. You understand why should we keep putting money in the economy to keep it growing, but why should we withdraw it back? Why should we take it back? Why should we reduce the supply of money? So here's the thing. Uh, there are a lot of ways to, the most important thing about for central bank is to control inflation. We talked about inflation yesterday. Is inflation a good thing or a bad thing? Tell me, guys. Is inflation a yes or inflation a no? Should an economy should have inflation or it should not have inflation? Tell me, guys. Is inflation good? Okay, good, bad, good, bad. Should be maintained. Okay. It's good when it's aligned with the growth of the economy. Both good and bad. Not good. Okay. Okay. Bad. So those who said not good and bad, and those who said good, uh, there are a few answers. Too much is bad. Absolutely. Anything in excess is bad. Anything. Even if you eat food in excess, it's bad. Anything you eat in excess is bad. But yes, so nobody's wrong here. It's not completely bad because if there is inflation, it signifies that the prices of things are increasing. Why they're increasing? Because there is good amount of demand for these prices, these products. Why there's good amount of demand? Because people are demanding more because they have more money, and they have more money because the work is going well. Their work is going well because overall macro demand is higher. So inflation is good, but to a certain extent. The a rise in prices should not be so high that day on day the price keeps changing, because that's bad, right? So a hyperinflation, a big inflation is not good, but too less inflation is also not good, because if price of everything is going down because the demand is going down. And why demand is going down? Because people are not demanding enough, and they're not demanding enough because they don't have enough money, and they don't have enough money because they are paid less. They are paid less because production is less. Production is less because economy as a whole again doesn't have much money, right? So it should not be too low, it should not be too high. So central banks decided a number that we should keep inflation at 2%. If it starts going higher than 2%, then it's a problem. We have to control the supply of money which is in the economy. Because there is too much of supply of cash in the economy, people are getting more cash and they're demanding more, so inflation is higher. But the moment they see that it is reaching to that barrier where it should not, they start reducing the supply of money, right? At the same time, when inflation is too low and when the central bank sees that the inflation is too low, it should be higher. People should be demanding more. So let's release some cash in the economy. Let's inject some cash in the economy so the businesses can borrow more, they can expand, produce, give more employment so people can get more cash into their hands and they can demand more and the prices can go higher, right? So that's what the central bank does by holding the supply of money at times when inflation is high and sometimes releasing or injecting cash into the economy when the supply is low. Now, let me ask you one thing. This 2020, the year, we saw a pandemic. What should the central bank do? Should it ease or inject cash into the economy, or should it withdraw the cash from the economy? Tell me, guys. Looking at the pandemic year, what do you think central bank has done? Has it injected more cash in the economy or has it withdrawn cash from the economy? Pump more cash, injected more cash, right? I'm getting more and more answers. Very good. Everybody answered. Don't think it's a right or wrong answer. If it's wrong, no problem. I'll tell you what's the right answer. But absolutely, it's very basic. Everybody's giving me the right answer. Brilliant. Amazing. So they should inject, right? And that's what they did. So let me tell you this. Now, one thing leads to another, right? So absolutely, because the demand has dropped, there was economic shutdown, lockdown, less production. So what central bank did? They injected more cash. Now, how they have injected more cash? How the central bank increases the supply of money? One is through the interest rates. Now, what happens is there is a rate at which the commercial banks get to borrow money from the central bank. What is a commercial bank? Like in UAE, the commercial bank will be ADCB, ADIB, amidst NBD, amidst Islamic. These are commercial banks. Which is the central bank? Central Bank of UAE is the central bank. So what does central bank? How the central bank eases the supply of cash? There is a rate at which central bank lends money to the commercial bank, and then commercial bank lends that money to the businesses and individuals. Now, when commercial banks borrow money from central bank, they give an interest rate because they have borrowed money from central bank, right? Now imagine that that interest rate is reduced from the central bank itself, which means now when commercial banks are borrowing money, they are borrowing it cheaper from the central bank. So they are lending out cheaper to the businesses and individuals. Now, when they are lending out cheaper, that means more businesses will be attracted towards the point where you can borrow more and you can expand more. So absolutely, somebody said printing money, dropping interest rates, injecting stimulus packages. So they can print more money, they can inject cash. They can reduce interest rates, which increases the supply of cash. All of this has happened this year in 2020. Now, tell me one thing. What is the basic law of economics? And when I say basic law, that means with what relates to demand and supply. Basic law of economics says what when it comes to demand and supply? Take a wild guess. Anyone? What does the demand and supply rule of economics says? When the supply of something increases, the price, the demand and supply gap, yeah, absolutely, absolutely. So what happens is when the supply of something increases, the price decreases, right? Or when the supply is less and the demand is higher, the price increases. Absolutely, demand is inversely proportional. Now, what happens if there is so much supply of dollar into the economy? What do you think happens to dollar? What happens to dollar? Dollar value. What will happen to the value of USD if there is excess supply of USD in the economy? Tell me, guys. Value of dollar drops, right? Absolutely. So if there is excess supply of USD in the economy, then the value of dollar drops. Now, tell me, though, for those people who have attended these sessions last 2 days, which is one commodity that is inversely proportional to dollar? That if dollar goes down, which is that commodity which goes up? The price of which commodity goes up? Okay, answer number one. The price of which commodity goes up if dollar goes down? Absolutely. Brilliant. Very good. Everyone answer. Perfect. Perfect. Brilliant. Okay, everybody's answering. That's good. So everybody is on board that if dollar price drops, then gold goes up, right? Now, since you have understood this point, let me take you back and show you what has happened in 2020. Please do have a very careful look at this. Let's see 2020. So right now, I will take you 1 year back, and this is the price movement of gold. Okay, I'm just increasing the text size so everybody can see this. Okay. Let's start with January 2020. See, this is where the gold price was in January 2020, $1,557. I hope everybody can see this. Write this down if you wish to. And now tell me, okay. Now this is January, this is February, and you see this is March. From March 5th to 23rd March, you see there is such a big drop. What happened right here? The pandemic happened right here, right? And then after March, what we have seen, we saw right from the March till August, from 1557 to 1470, it went to $2,000, $600 bounce in gold prices. What happened there? Why it happened? Because when the pandemic happened, all the central banks throughout the world reduced interest rates and injected more cash. When they injected more cash, the supply of dollar increased, the supply of currencies increased, and the value of dollar went down, and the value of gold went up. And gold value did not go up just because dollar got devalued. The value of gold also went up because with pandemic coming in, so that's where the fundamentals kick in the case of commodities. Whenever there is an element of uncertainty, whenever there is an element of confusion or perplexion, people start investing money into gold, because during pandemics or epidemics or market crashes, people start looking for safe havens. What is a safe haven asset class? A safe haven asset class is an asset class which is expected to retain its value during recession. Okay. Now, that may or may not happen. Okay, because these are commodities, so they would react to everything. So that's why it's not my first thing to go to. But how investor sentiments works out here is that whenever there's an uncertainty, so that's why you see from March to August, from $1,400 gold went to $2,000, and that's a phenomenal increase, guys. This is not something which happens every day. So anybody who invested in gold during the pandemic would have made a lot of money right there, because central banks reduced down the rates. There was already a lot of uncertainty. So dollar being devalued, excess, so much of cash being injected, plus uncertainty pushed gold prices higher. This is what fundamental does. Okay, so in a commodity, you would not look at a support or a resistance or see the historical price charts. You would just go and look at the news, what's happening. Now, what role does FOMC played here? So we talked about the news, right? Now, why I say FOMC meeting? Because when this meeting happens, that's what they discuss about. They discuss about, should we increase the interest rate, should we reduce the interest rate, should we put some cash in the economy, and stock markets react to it, dollar reacts to it, gold reacts to it, and a lot of currencies which are compared to dollar reacts to it. That's why it's important for us to keep a track on these central bank meetings. So when European central bank meeting happens, euro gets affected a lot. German index, European index, it gets affected a lot. When FOMC meeting happens, S&P 500, Dow Jones, gold, dollar, these kind of financial instruments will get affected a lot. You can easily find out when is the next FOMC meeting and what is the expectation. So that's where you can read news, you can talk to your consultants, and they will give you a view that what is expected, right? So that's the first news event which you should clearly look at. I hope you understand the role of central bank and why the movement happens, why it happens, what it happens. Second thing, GDP, the gross domestic product. Now, gross domestic product or the GDP of a country, it's one of the most important things. The total value of goods and services produced within a period, that's your GDP. Now, if there has been a consistent growth in GDP, no problem. But the moment growth starts happening at a slower pace, it is an alarming situation. When the growth diminishes, reduces, that's where people think the recession is coming. You will not wait for the GDP to go negative to identify recession has happened. It happens much before that. When the economy starts growing at a very slower pace, that means the economy has slowed down and there might be a recession. So the GDP number, whenever it comes out, it affects, again, if it is a US GDP, which is one of the most important data, or if it is a Chinese GDP, that is also very important because China is a manufacturing economy. And if Chinese GDP has slowed down, that means the world manufacturing has slowed down. So that's why you have to have a closer look at Chinese GDP and you have to have a closer look at the US GDP also. Going forward, what else we see? The CPI data. What is the CPI? Consumer Price Index. Any idea what a consumer price index would measure? Consumer Price Index. What do you think it measures? In one word. Tell me in one word. What does it measure? Take a wild guess, guys. Consumer Price Index. What does it measure? Okay. Demand, relation, price, demand, consumer expenditure. Okay. So one word, it measures inflation. Consumer price index means, so consumer confidence is separate. Consumer confidence is separate. But yeah, price of goods, or basically it measures inflation. It measures how much the price of a specific basket of goods have gone higher or lower. So it is one of the most important area, because if central bank, now tell me, if you are the central bank of a country and you have to decide whether should I increase interest rates or should I reduce interest rates, how will you decide it? By looking at inflation. And how will you find inflation? By looking at the prices of a basket of goods, whether they are going up or down. Consumer price index measures that. So the CPI data, whenever it comes out, it is one of the most important data, because if it is higher, which means the rate of inflation this month has increased, that means the dollar might get stronger. Why? Because of the inflation is going higher. That means central bank might decide to reduce the supply of cash. What happens when the supply is reduced? The supply is reduced, demand is more, the value of dollar goes higher, right? Just looking at the CPI data, if it is alarming, if it is going higher, dollar can appreciate after the data comes out and gold might come down, right? So this is how you basically relate. I will also tell you how do you identify this data and what are the key things which you have to see once I finish this particular slide. Another important thing, employment indicators. Again, if you're a central bank, you want to decide on how the economy is doing, you have to see whether people have jobs or not, right? So the most important employment indicators are first and foremost non-farm payroll. Remember this name, write it down. It is also called NFP, and NFP is capable of bringing a financial earthquake in life of a trader because non-farm payroll data, it comes on every first Friday of the fresh month. It comes once in a month, and it comes on a Friday, on the very first Friday of the fresh month. So for example, December has already gone. January, first week of January is when the non-farm payroll comes out. What does non-farm payroll measures? So non-farm payroll is a private jobs report. To simplify for you, how many jobs were generated in US in the previous month and in the private sector? And this private sector will exclude the farming industry, not the farming industry, just the private sector jobs. So how many jobs were generated in the private sector? If the number of jobs generated in the private sector is higher than the expected, central bank becomes more confident that the labor data is good. So if they have to increase the interest rates, they would go for it. But at the same time, they see that the number of jobs generated is less, it might stop them from increasing the interest rates, which might again make them think that should we wait before this happens. So non-farm payroll is number one. Second thing, unemployment rate. The most important, one of the most important data which comes out with non-farm payroll is the unemployment rate. What is the unemployment rate in a country for this particular month? Surprisingly, if you see US unemployment rate before the pandemic happened, it was down almost 60 years low, which was supposedly a good thing, of course, because it was down by all time almost 60 years low it hit. It was a good thing, right? So employment indicators are also one of the most important indicators in the life of a daily trader. It affects dollar, gold, indices, and other commodities as well. Last but not the least, we are looking at, again, guys, there are many economic events. Okay, we'll just look at the market calendar and we'll read some of them. Currently, what I'm looking at is right now the manufacturing data, the ISM report on manufacturing. Now, when we talk about ISM stands for Institute for Supply Management. Okay, it's a US based center, and the ISM report, there is a manufacturing and a services report. These are one of the most reliable economic indicators because they provide guidance to many professionals and economists and analysts and government businesses. So this is something which you have to see on whenever this data comes out, because so let's take this is in two terms. So there is a PMI. PMI means you look at the manufacturing report of the past, and you see that are any new orders or any new productions coming in. So if you see that there are the PMI has increased or the manufacturing has increased, that means that the overall economy is growing because manufacturing has increased. Because if production is growing, there are new orders coming in. That means there are more people, the production is increasing, supplies are higher. So at the same time, you will see that if manufacturing goes up, then the inventory of raw material will also grow, right? That means expected that exports and imports are also growing. So that's a very important thing, guys, when you're looking at the manufacturing PMI of goods and then manufacturing of services as well. So that's how the ISM data kind of tells you manufacturing of any economy is really important. Whether and most important data, the manufacturing of China is really important. So you have to keep a check when the Chinese manufacturing data comes out so you can see. Now, your question will be, where do we find all this data? We are working throughout day and night. How do we find out? How do we have the time to find all this data? Nothing to worry. When you go back to your platform, there is a tool right here. If you see, just next to the account section, those who have logged into their demo accounts, check this, something called market calendar. Okay, right next to this pulse, next to the account, there's a pulse. Click on market calendar. Now, when you click on market calendar, you see a lot of news. Let's eliminate the noise first. Go to market impact. Okay. When you go on market impact, only click the three red dots because those three red dots are the ones which have a higher impact of the news. Now, today you see that a lot of this all news is completely done. Okay. That's why it is black. Go tomorrow. Just there is a date right here, Tuesday. So select Wednesday. Next. Now you see a fresh data coming in tomorrow. There are flags just next to the news which indicates that which country the news is for. Morning, and this all is UAE time. Okay. So you can see that in the morning, the Japan trade balance comes out, which will affect the Japanese stock index, the dollar yen, and other commodities. Then you see there is a CPI data year on year, and that is for UK. Now that will affect pound. If you see there is a lot of European data coming out, purchasing manager index, the PMI data, right? Manufacturing data, which is going to come out tomorrow around 1 p.m. So it affects the euro as a currency and it will affect the European stock market index also. You see there are some numbers on the right column. There is previous data and then there is a forecasted number. So definitely, for example, if manufacturing, look at the manufacturing data of Europe right here, or it is expected to be down because last manufacturing data was 53.6. This time it is expected to be 53. So if the manufacturing comes down below 53 or below 53.6, then it may not encourage euro to go up. It might push euro to go down for a very small period of time because, as I said, this is a day trading data, so it doesn't have a very long term impact. But if you're trading right there in euro, it will have that kind of impact. You go down, you will see there is a FOMC, United States Fed policy decision rule. So why I'm doing this session today and telling you about FOMC, guys, all of you tomorrow, this is going to be at 11 p.m. Okay, I would really request everyone who has a demo account right now, tomorrow switch on Bloomberg TV or just keep yourself updated. 11 p.m. there is going to be the Fed policy decision rate. It is expected that the interest rate is going to be the same. The central bank is not talking about an increase in interest rates. So most probably there's no action. But imagine the times when there is a significant action expected. So that's the time when you should have a close watch. But just because we all are learning this time, please have a close watch tomorrow at 11 p.m. and also around 7:30 because that's where the oil inventories come out. Again, guys, oil inventory is a very important fundamental data for oil prices. Okay, let me tell you what happened. So, okay, let me see first. Tomorrow is 16 December. Okay, now before this, oil inventories come out every Wednesday. So if you go a Wednesday before this, I'm just going back. Look at this. 9th December, there was a oil petroleum data right here. This is oil inventory. Just tells you the net change in the supply, in the total oil. If you see here, it is 15 million barrels. What was expected was that there will be a reduction in the supply. What do you see? Excess 15 million. When was it? 9 December, 7:30 p.m. Okay. Now let me show you what was the impact on the crude oil prices on 9th December 7:30 p.m. Because only this way you can get to know why a data is important and what it does. So I'm just going to reduce down this to last 1 week. Now we are talking about a data which was on 9th of December 7:30 p.m. UAE time. So I'm going to oil. So let's take crude oil West Texas, which is a US oil. Go back last 1 week. 9th December. Now I'm increasing the text size so you can see the date and you can see the impact. This is 10th December right here. This is 9th December. Increasing it. Look at this. Guys, look at this right here. 9th December, 7:15. It was $46 per barrel. And then 7:30, the oil inventory came out. I hope everybody can see this very important thing. When the moment oil inventory came out in 15 minutes, from $46 per barrel, oil went down all the way to 45.1, almost $1 drop. And then again in the next 15 minutes, it recovered back to 46, right? So just for the data, because the supply was in excess, we saw a sharp drop in oil almost by $1, and then again it recovered. That is what the significance of oil. If everybody can see this chart, if you're understanding what I'm saying, please give me a yes or a okay, so I get, at least I have an idea that you're looking at this, because this is one of the most important. This is 1 week before, guys. This is going to be there tomorrow. Tomorrow is Wednesday. So again, tomorrow at 7:30, the oil inventory will come out. Fortunately, we'll be together so we can check the impact on oil prices for tomorrow, right? What I showed you right now was on 7:30 last week, that how after the oil inventory showed excess, the price from $46 went down to 45. So as a daily trader, what are you thinking? As a daily trader, you're thinking, this is excess, so let me short sell oil right away. Now you know how do you make profit from the following prices. You make profit from the following falling prices by short selling it, right? I told you yesterday how to short sell, that you short sell crude oil, you borrow it from your broker, you sell it at the price. So if price goes down, you buy it back at a cheaper price, and the difference you keep, commodity goes back to the broker. So at this point, you could short sell and do a small term trade. And as I said, this is for daily trades, right? So after you saw that it dropped and then again it bounced back. So over the period of time, we have seen oil going back to 47, 47.5, 47.6, which is the current price. So please this is what the fundamental is all about, right? So we are looking at the news at this point of time. We are not looking at the technicals completely. So that is also one important news which you can see. So going back to the platform, this is where you go to the market calendar. So this is Wednesday last week. And then fast forward, we see tomorrow is Wednesday, so we have all these news coming in. There's retail sales in US at 5:30 p.m. What does retail sales do? Retail sales will tell you the total retail sales for the month on month, whether it has increased or decreased. As you can see, there is an expectation of minus 0.3%, a decrease. So that can be weaker for dollar and a weaker for stocks. But as I said, these are news which may have short-term impact, except the big news like FOMC federal policy rate decision. These kind of news have a longer term impact, but others, they have short term. And if you go higher on Thursday, you see again unemployment claims, housing data. Housing data means how many number of existing houses have been sold or how many new houses have been constructed. So that also tells you a lot of things. Look at Bank of England interest rate announcement. So this will affect pound a lot. Interest rate announcement and asset purchase program. So these kind of things, guys, you as a daily trader, you should see. And as a long-term investor, you should be aware of. That's what I'm saying, right? So this is something we can look. So this data is available on your platform. All you have to do is just look around and you'll be able to see. Now, coming back, the next thing what I wanted to talk to you about was What happens in case of stocks? So I told you about oil, I told you about gold, I told you about currencies, that which are these important news, how does it impact, right? Now, what about stocks? How do I buy and sell stocks on the basis of fundamentals? What are these important things? So starting from the very first thing, earnings announcement. Ladies and gentlemen, earnings by far the most important announcement for stock fundamentals. Lot of movement. So what I'm going to do tomorrow, I'm going to share some strategies tomorrow and day after tomorrow. Uh, Tomorrow technical, and on Thursday while we trade, I'm going to share some fundamental strategies with you about shares and how do you buy and sell. But today what we are going to do here is some earnings announcement. How does earning announcement works? What earning announcement is, everyone has a report card. When you were a kid, and now if you have a kid, whatever happens in this school, every year there's a report card. Every midterm there are exams and they tell you the result, right? Why? Because to keep the performance in check. Now, every company, I told you on the first day what a share is. A share is nothing else but the money which a company takes or from the person and makes him a business partner, right? So if I have bought shares of Apple, I have the right to know that what is happening in Apple. What is the profit in Apple like? How much money they are making or how much money they are not making? Or what is the deal with Apple, right? Every public company or every company which is listed on public, on stock market, is obligated to declare the earnings. Every quarter in US stocks, they come with earnings. Write this, the key dates, the key month when you should definitely trade or invest into a stock. First, it starts with January. January is the first. So, what happened in October, November, December, the results come in January. So, January is a very good month to trade or invest into stocks. You can expect a lot of volatility in companies. Okay, January. Next, April. Again, because what happens in Jan, Feb, March, the earnings results come out in April. So April is again the next good month to invest or trade into stocks. See, you can always invest and trade into stocks. But why I'm defining these months? Because there's a lot of movement which happens. Obviously, risk also comes in there. But if there are few good companies where you're expecting positive results, then you can just buy them and wait for the positive earnings and it will push stocks higher, right? So January, April, then July, another quarter, which is a very good month to trade and invest into stocks, and then October. So four times: January, April, July, and then October. These 4 months are very significant, and that's where the earning results comes in. Okay, what does the earning results have? What does it shows in the earnings? How do you interpret the earning season? Please have your notepads ready. There are three important things which you should definitely look in a earnings news. Okay, three very important things. One is EPS, which is called earning per share. Second thing is revenue, and third thing is forward outlook. These are the three things. And by the way, this news is readily available. You can see this news on your phone even, or the consultant can update you either way, because when the earnings come out, the companies are under obligation to publicly disclose it to everyone. So the moment earnings comes out, it is available to you and you can decide whether you want to buy or sell the stock for the next quarter. EPS, revenue, and forward outlook. You should see three important things in the earnings announcement. EPS is what? Earning per share. Earning per share means whatever the total income after taxes and everything, net income, distribute. There are few shareholders who have a preference to get dividend over common shareholders. So that is one kind of obligation. So from the net income, let's say the company gave dividend to all those preferred shareholders. So whatever is the remaining income left, divided by the total shareholders or total outstanding shares, you will get a number. And that is your earning per share. Please make no mistake. That is not the earning which you get on your share. Okay. That is the earning per share to tell you that how much if productive your capital has been to the company or how much efficiently they have utilized. Okay, that is not the money which you get. The money which you get is dividend, and that is optional by every company. Dividend and earning per share are two different things. Why we call it earning per share? Because that's the earning from the company's point of view. The shareholder doesn't get anything out of it. But this is calculated just to find out whether your capital is being efficiently utilized or not, because net income is the income after taxes, after depreciation, and then whosoever has to get the dividend, the preferred shareholders, dividend is also given. So whatever is the remaining sum, it is divided by the total number of outstanding shares. When I say outstanding shares, that means how many number of shares a company has in the market. So you divide it, so you will know that per share, how much income was generated. So if I have contributed $1,000 in Apple, by looking at the earning per share, I can see that how my $1,000 were utilized in Apple. As compared to last quarter, this quarter, how much earning per share is. So definitely tell me one thing. If earning per share in last quarter was 0.60 and earning per share now is 0.65, is my capital efficiently utilized or not? Previous quarter, it was 0.60. This quarter, it is 0.65. So is it a good news for the company? Has earning per share gone up or gone down? It has gone up, right? So what people do, first thing, what you need to do is the moment you see earning per share. So what Wall Street does, there is a group of Wall Street estimates. Okay, there are Wall Street analysts who are analyzing each and every company, and just before the earning per share of a company comes out, they put an expectation that Wall Street expects from Johnson and Johnson to come up with an earning of this much for this quarter. Now, if Johnson and Johnson gave the earnings, which is exactly the same what the Wall Street estimated, stock price has matched the Wall Street expectations and it will continue to rally given all other factors are correct. But if they have missed out the Wall Street expectation and instead of reaching, let's say 65 cents, the earning is only 55 cents. The company still grew, but it did not match the Wall Street expectation. What happens? The stock price starts going down just because it did not meet the Wall Street expectations. So first thing which you have to see in an earning per share news is that the company should meet Wall Street expectations. Now, once that is done, compare that earning with the quarter before. 2020, 2021 January earnings will be compared with 2020 October earnings. That's one. 2021 January earnings will be also compared with 2020 January earnings. Okay. Now, somebody asked me, very good question, where do we see Wall Street expectations? Nothing to worry. If you're right there, go to Nasdaq earnings calendar. If you go to Nasdaq's earning calendar, let me show you right here. Nasdaq earning calendar. Anyone else also, if you want to try and see how it shows, how the earning calendar looks, you can look at the Nasdaq earnings calendar. And I'm sharing the screen with you. Just give me a second. Right here. See, I've just opened an earning calendar. It's readily available. Look at this. So you can see a column which says consensus EPS forecast for Nordson Corporation. Okay, this is October 2020, guys. This is already done. So I'm showing you the same one because the next one will be again in January. So if you see earning forecast 1.53, right? Earning forecast 0.12. So this is the expectations which you can see, the Wall Street consensus, what they call it, right? So you can find out very easily for January also that when these earnings are going to come and what is the idea. So basically by the end of December, January beginning, the earnings will start coming, and that's the best way you can trade that time. Anyone, just go to Nasdaq earnings calendar. Search Google for Nasdaq earnings calendar, and you will reach to the earnings calendar of Nasdaq. Okay. Now, so I told you one thing, which is EPS, that is earning per share, which you should look at the stocks. What else you should look? You should look revenue. What is revenue? Revenue is the total profit, the total revenue which is generated in the company. Wall Street consensus is not only about EPS, the forecast is also about revenue. So if they expected Boeing will have a revenue of $35 billion, they should have this quarter. And if Boeing come up with 34, then they missed the revenue expectations. Okay. So, but if they outperform the Wall Street expectations, then it's good. So EPS revenue in line. Last but not the least, very important thing, the forward outlook. The previous quarter has gone. What's next? The new quarter. So what the next quarter will be like? What is the expectation of earning in the next quarter? That all comes in the earnings transcript. Okay. So I'll give you one very good example. Back in 2014, Apple was very consistent in giving good earnings, good revenue. 2014 or 15, they came up with one news that our earnings have outperformed, our revenue has outperformed. Just one thing, next quarter, we might see earnings of this much. And Wall Street expected the next quarter earnings slightly higher. So the Apple's forward outlook missed the expectation and the stock went down by 10%, even after having strong earnings and strong revenue. So please, you should keep a check on all these three factors. Let me give you a sample of how the earning report looks like. So it is clear in your minds that how to read the earnings report. So I'm just going to give you a news earnings Walt Disney. I'm just searching a random earnings report so if I can see. Okay, right here. I think this is an earnings report. Okay, this is slightly too big, but let me show you a news related. Okay, just look at this one. This is the first thing which I'm just searching on the Google, so I'm getting this. Should help you out to understand. Right here, see. Look at this news right here. The Walt Disney today reported earnings for its fourth quarter and fiscal year ended 3rd October 2020. Earning per share from operations showed a loss of 0.39 compared to income of 0.43 in the prior year quarter. So previous it was 0.43, now it is 0.39. Okay. Now there are other news related to it. Let me show you. Okay. Earnings, Walt Disney down. Yeah, look at this one. So this is a detailed news which comes out and you will see the impact also. See, revenues plunged and profits evaporated at Walt Disney during its most recently quarter earnings. Okay. Revenue fell 23% to $14.7 billion. Okay. While the company reported a loss of 710 million instead of 777 million profits. This is one thing. Now, look at this. Disney estimated that COVID-19 had taken $3.1 billion bite out of its quarterly revenues and $7.4 billion chunk out of its annual sales. There were a few bright spots. Company did tout the ongoing success of Disney Plus, its Netflix challenger, saying the streaming service had attracted 73 million paid subscribers. So guys, these are very important news. Look at this. The loss of 20 cents per share compared to a 1.07 in earning per share company reported the same quarter in 2019. So you have to compare these earnings report, and obviously your consultants will be there to assist you with how everything works out. But this is not something which you cannot do it on your own. The whole idea of conducting this whole sessions, all these sessions are that it's very easy to find all these things. It's available right there. So whenever the news comes out, now look what it shows. When I write here January 2021 earnings. Okay, I'm just searching it here. See, earnings calendar as of January 3rd. Schedule of release of real earnings. Earnings calendar for Monday, January. So all these things you can find out which kind of stocks are going to come up with their earnings. Right? This is January 2021 again. So there are a lot of stocks. There will be a lot of companies which will come for the earnings calendar. Right? Look at this, for example. Just opening a random site over here. So January 3rd, next week, if you select, okay, let's take any one day, for example. Look, now I put January 15th. So Bank of Commerce, Citigroup, right? Q4 earnings. See estimated EPS right here, guys. Everybody should be able to see this. Now Citigroup earnings, okay. Citigroup Q4 earnings will come on 15th of January, okay. And expected earning per share is $1.2. Now, if Citigroup declares earnings less than this, the stock might drop. Up to the 1.2, the same number, it might go up. And if more earnings than that, then it has beat the expectations. Even better, right? Look, JP Morgan Chase, Schlumberger, all these companies are going to come on 15th of January, Wells Fargo. So it's going to be a financial day. Most of the financials will show their earnings on 15th, and they all have their estimates right away. So this is the news which is easily available, guys. You can easily find out, and obviously you can talk to the consultants as well, and they can help you out. Okay, the revenue, is it a profit after taxes? Somebody asked me the question. So revenue is, yeah, I think, so there are a lot of different things. There is EBIT, which is earning before interest and taxes. There's a EBITDA, earnings before interest, taxes, depreciation, and amortization expenses. But what you're looking at, revenue is, I think, mostly profit after tax or earning after tax, right? So this is something which you can look at. Few another important news before we conclude this session, which you should know. And before everybody leaves, let me just put this poll right here. Please answer to this poll. Who is the current president of US? I'm going to give you a very important news right here. Please, everyone, if you can answer to this poll. Just want to make sure everybody's on the same page. Who is the current president of US? Meanwhile, I'll take a question. If a company announces a loss, but this loss is less than what was forecasted by the analyst, does the increase the stock price? A very good question. So sometimes earnings do come. So sometimes there's a fall in earnings, but the fall which was expected by the analyst was much higher, and the fall which came now was less. So it does impact the stock price positively. So that's correct. Okay, I'm just going to look at the poll again. 81%. I'm going to end this. 81% said Donald Trump, 18% said Joe Biden. I've always told you there is no right and wrong in these things. Those who said Donald Trump are not wrong, because till the next 2 weeks, the inauguration will happen in January. Donald Trump is still the president of US. So you're not wrong. So those who said Donald Trump are right. Those who said Joe Biden are not wrong. He is elected, but right now he is not the president. Okay. He will become the president elect during the inauguration, and then only he will be able to implement his policies. Why I'm telling you guys, why did I ask you this question, and why I'm saying this? Because in these 2 to 3 weeks, Donald Trump is capable of creating a chaos, and which might affect the markets. So that's why you should know that what's happening right now. Trump is still the president, and before he leaves the office, he's already talking about how the polls were rigged. It's only a matter of time if somebody takes it seriously. Right now, a lot of unorthodox events have to happen for Trump to get reelected. Okay, and uncertainty can rattle the markets, but thankfully, it is not something which is expected on a major scale. So, Trump is still the president. Wait till the inauguration happens, and then Biden will be the president. Right? Very quickly, just let me take a few more questions, guys, about the platform. I still have 5 minutes before I conclude this. So I'll just take a couple of examples. So news, why I asked you about this is what happened in elections. Let's study, because this is the last thing which I had in mind, Donald Trump and Joe Biden. What happened during the elections was we saw a complete majority for Joe Biden here. Trump had no chance, and we saw Biden winning the presidency, and we saw gold prices fluctuating on the very same day. So we'll look at the charts, what happened on 3rd and 4th November. Meanwhile, few questions. What is PE and how does it relate to EPS? PE is price earning ratio, and it does not relate to earning per share, but you can look at a price earning ratio of a stock and you can compare it to find out whether a stock is undervalued or overvalued. So it does helps you to find out whether the stock could be undervalued or overvalued. Uh, in the fundamental analysis, so PE ratio is price to earning ratio, guys. There's a question which is asked about PE ratio, so I must tell you, price is the current stock price divided by the earning per share of the company. Okay. Now, when you put, if you once you do that and you find the PE ratio of the company, it just tells you that looking at the current stock price and looking at the earnings, how expensive or cheap the stock is. The correct way to study a PE ratio is that first look at the which stock you are looking at and look at the sector. If you're looking at Microsoft, you cannot compare the PE of Microsoft with Pepsi or Coca-Cola. You can compare the PE ratio of Microsoft with a tech company. You can compare Amazon and Alibaba PE ratio. You can compare Pepsi and Coke PE ratio. And then whichever PE ratio is higher, that stock is overvalued. And if the PE ratio is less, that stock is undervalued. And you should also see the PE ratio of the entire industry. The food and beverage industry, what is the average PE? So then you compare the PE of Pepsi with the overall industry and then with the competitors. So we can again have more discussion about this. Give a brief on beta also. Okay, few more questions. Let me just take one more question here. During this change of president, the market fluctuate a lot. It does fluctuate a lot. Let me just show you a very quick uh, snapshot of what happened on 3rd of November. I'll show you everything. Gold, for example. Let's go to 3rd November first, last 1 month. So 23rd November, 16th November, look at this. This is 9th November right here. And then there is 2nd, 3rd November right here. Look at this. 4th November, 3rd November. So on 4th November, gold from $1,915 went down to 1,882, right? Again, after the results came out, from 1882, it went up all the way to 1961. $100 bounce just after the results came out. $100 bounce over the next 1 week, of course. And then the vaccine news came out. So from 1961, it came down to 1860. $100 drop the moment the vaccine news came out. Okay, so that's the impact of news. Now let me show you what happened to US stock market on the day of elections. S&P 500. Let me show you S&P 500 right here. SPX 500. right here. So look what happened a month ago when the elections happened. 23rd November, 9th November, 2nd, 3rd. Look at this. Look at this. This is 3rd November, guys. 2nd, 5th November, 4th November, 3rd November, right here. From 3,200, S&P went for the next 1 week to 3,600. So that's a phenomenal 10% increase after the elections, right? So this is the movement which happens. Gold, dollar, everything moved. All other stocks moved. Look at the renewable energy basket. That also moved. So that's something which is the part and parcel. It happens during the elections. That's why the news is really important. A lot of people came in the office, traded on the day of elections. Obviously, there's a lot of risk. So you need to keep your accounts well funded, less leverage, absolutely less leverage or no leverage. And that's how you should trade and speculate. What will be the outlook for crude oil and other related commodities with Biden expected to prioritize green and renewable energy? So it's a very good thing. With Biden coming in, definitely the green energy or the clean energy stocks like Tesla, Neo, and other companies which are Jinko Solar, for example, the renewables will get a boost. They have already got a lot of boost since the Biden has come. Oil prices, since Biden has been very open about banning the fracking and exploration of oil and the non-renewables and the fossils, uh, there is a possibility that oil stocks might suffer. But also there is one more thing that with Biden coming in as a Democrat, there will be a lot of stimulus which will come because Democrats have favored always a lot of financial aid, injecting cash in the economy. So that might increase the production and that might increase the demand for oil in manufacturing. That is one thing. Plus, also, a Democrat, Biden, has specified that he's going to change the foreign policy. Okay. Now, foreign policy changes, which means Iran's oil sanctions can be removed, and Iran, which was not contributing to the OPEC oil supply before, might start contributing again. So that might again increase the supply of oil. So overall, oil prices are expected to remain down. Uh, Oil stocks also may not get much boost up, but yes, I mean green energy and clean energy stocks might get more boost. So I would definitely favor renewables at this time. Energy stocks could give you good dividends. Plus, European oil stocks can actually is a better choice because I told you European stock markets are still undervalued, and European oil stocks are giving a good dividend at this point of time. So companies like Royal Dutch or British Petroleum, sorry, and Total could be a good idea to look into. So that is there. Any more questions? Somebody just asked me about uh, beta also. So beta of a stock, you have to understand about beta. It just shows you how much a stock is volatile in relation to the overall market. So, for example, if the beta of a stock is less than one, okay, that means so a higher beta stock are more riskier, but then their return potential is also higher. Low beta stock have low risk, but then their returns can also be low. So, for example, if a stock has a beta of 0.5, that means it is less volatile. Okay. So if a stock had a beta of 0.5, which means if market falls down by 1%, the stock will fall down by only 0.5%. Okay. If 10% return, if the stock market went down, if stock market went up by 10%, the stock only went up by 5%. So the index goes up by 10%, stock goes up by 5%. That's what it means, beta of 0.5. So when you're looking at the beta of the stock, it does helps you to assess whether the stock is undervalued, sorry, the stock is high volatile stock or a low volatile stock. One question, I'm a student right now currently and I'm not working. So how much do you think is the ideal amount to start investing? See, first of all, if you're not working and if you don't have a stable source of income, please do not trade. Do not trade and do not speculate. Trading is for not for you. As far as investments are concerned, you can start investing a smaller portion of your total savings into stock market indices, but for a longer period of time. Don't get involved yourself into day trading, please, because I would normally expect somebody to have a stable source of income before they start speculating or trading into stocks on day-on-day basis. But look at the stocks, look at the areas like water distribution companies, which are much more futuristic. So for you right now, most important part is, because you don't have an additional source of income, that's why I'm telling you to go long term. If you had an additional source of income and you were a student, I would tell you to invest into growth portfolio, into tech stocks, because tech stocks can be volatile, but it can build the wealth for you. And if it goes down, then you have more years of earning and compensating that loss with coming income, because you have good amount of years to work on it, right? But right now, because you don't have a stable source of income, you are not working right now, please do not invest into too much growth stocks, because volatility will be too high. Invest into stocks which have a stable dividend. What's the minimum to open an account? See, I've taken demos worth $30,000, $50,000, $10,000. So I would suggest, do not invest $500 or $1,000 for trading and speculation. Okay, because of leverage, it might get evaporated too fast, and it will be more of a gamble. If you're investing, put a amount which you yourself can also be serious about. So whatever amount you put, please understand that leverage is the key. If you're putting $1,000 and taking $5,000 worth positions, uh, it's extremely risky. So put at least $10,000, $20,000 to begin with, see how it works out for you. And then slowly, once you are aware of the trading and speculation, see, it depends a lot on what is this amount for. Is it for trading, speculation, or is it for investment in stocks or investment in indices or any kind of strategies? Because strategies arbitrage is done with a much higher amount. So let's talk to a financial consultant. We would want to know what is the source of this income, what is your expectation, how for how long you want to keep this money in the account, and how much is your income. So that's the most important thing. Please do not exhaust all your savings into trading and speculation. Along with EPS, revenue outlook, what are the other variables to be noted? Debt equity ratio, that how much debt is with the company. What are the new products coming in? Like Disney Plus is a pretty good challenger to Netflix. But then what are the significant parts of Netflix which you can? So these are also some fundamentals which you can look. Please advise at the end of the session, where can I see these 3 days on YouTube? Century Financial, subscribe to the channel of Century Financial, and you will have the access to go on YouTube, type Century Financial, and you will be able to see the YouTube channel. Subscribe it, and click on the bell icon to receive more notifications if there are any new videos. And you talk to your consultants, and they can help you out. Could you please give some idea about the charges such as spread, swap, finance charges? So at this point of time, you want to know about the charges, you can talk to the relationship manager directly. I'm sure you all have RMs now, so you can talk to them. At this point of time, I'm a doctor, so I'll be telling about how things can be cured. What are the charges to it? You can talk to the relationship manager, and he can tell you most better way. What I would suggest you is, charges and everything comes secondary. First and foremost, just try to learn this, understand before you open any account. Lot of connection issues today. I'm extremely sorry if you have faced this issue. This is absolutely not in our hands. Sometimes the connection is extremely flawless. Sometimes it happens. So I'm extremely sorry for this. But you can subscribe Century Financial channel on YouTube, and you can click on the bell icon, and you can go to the latest webinar, Investor Education Week. Day 1 is uploaded. Day 2 should be uploaded today, and day 3 will be uploaded tomorrow or day after. Do come tomorrow for the technical analysis. I think these are all the questions I've answered. And please use your demo accounts. For those who are new today, talk to your relationship managers, take demo accounts, and try to do these trades. Tomorrow, we'll talk about technical analysis, charts, trading strategies, pair trading strategies before we move on to the final day. So please be ready with your platforms tomorrow. I will show you the very introduction of what a chart is, what a candlestick is, and how it works out, right? So hope this session was worth your time. Please, I have been saying this from day one, if it is possible for all of you, do review Century Financial on Google, whether you like this session or not. It really helps us keep going this with this. And I'll definitely see you tomorrow, same time. My name is Yogesh. Please be safe. Do wear your mask. I have one right now. I'm in an enclosed cabin. But please stay safe. Do wear your mask. Be in good health. And we'll be seeing you tomorrow once again for the technical analysis session with more and more information on technical trades and strategies. You have a great night ahead. Thank you once again. Um, there's one gentleman needs to know about CSI courses. Let's have a face-on-face conversation and we'll discuss more about this. Thank you guys once again. Have a safe night and I'll see you tomorrow.